Let's bring in Mark Mahaney, Evercore ISI, head of internet research. He has an outperform rating on Netflix. Mark, it's great to have you on. I want to get your initial read on what we just got here from Netflix. There's a lot to comb through.
They needed to put up a strong print, and they essentially did. The bar was high for this stock. It's going to be lower for most other tech stocks that I look at, but the bar was high for this one. It was perceived to be a defensive stock, as some of the other commentators have already pointed out, and it's showing that. In fact, the margin results are pretty darn impressive. So I think that's probably the biggest takeaway. Unfortunately, we're no longer going to get subs. We sort of knew that. And it looks like that price increase was, they said that the churn related to it sort of came in line with expectations. We think it may have come in a little bit better than that. It seems to me like this guidance for the back half of the year is reasonably conservative. I would think that we're going to be taking up numbers as we go through the year. So I'm a little surprised it didn't take up the full year, but I get it. It's early in the year. They did point out that Squid Game's the finale is coming out at the end of June. That should be a boost for the business as it was the last two times. Overall, it seems like a solid print to me.
On the one hand, you see a weakening dollar, and that is a tailwind as the year goes on if that trend continues for Netflix and others that have these global businesses. On the other, we've been talking about it nonstop, all of the uncertainty tied to trade policy and tariffs. Now, I realize that Netflix, the actual business, may be somewhat immune to the specific dynamics of trade and tariffs, but is there still a risk here that you could see folks in other markets start to pull the plug on Netflix because they are mad at the U.S. or boycotting or whatever else narrative we've been starting to hear from certain places?
It's possible, Morgan. I think they're completely immune to the tariff issue unless international governments want to start going after U.S. services companies, which is a large part of our economy. And if there's retaliation against services companies, okay, maybe something like that would happen with Netflix. I haven't seen of that. And in terms of the recession risk at Netflix, there's nothing that's recession resistant, but this is about as close to being recession resistant, or relatively, it's the most recession resistant name I cover. It's just really high quality entertainment at a very low price point. The worst case, you pay $7.99 for a whole month of access to content. Entertainment generally holds up well in kind of soft macro environments. Netflix will as well. And Netflix has been tested. We've seen that Netflix now through multiple economic cycles. And even though it's much bigger now than it was in the past, I think the value proposition holds. This is as recession resistant a tech play as you can find.
So Julia just mentioned more than 700 million people, over 2/3 of them outside of the U.S. Is that number in line with your expectations? And how important is that number for them as they build out this ad tier and all the infrastructure associated with it?
That number's just maybe a little bit bigger than I think we in the street would have thought, modestly bigger. The one quick thing here is this is a subscription business, and so you don't get these huge, massive upsides. It's just you've got that large of a base that you can only, you can bring in a lot of new subs, but it just doesn't move the needle that much. So it's still impressive, the upside they had. Now, I realize part of that is currency. And then the two new things, if you're looking at Netflix Fresh today, you like, what's new? What could be new about the story? There's two things. One is there's ramp up in ad revenue. If they can double it this year, they laid out some informal guidance, or at least they talked about it internally in something that was disclosed earlier this week in the Wall Street Journal. I think they can probably get close to $9 billion in ad revenue. That would make them a different player. I think that would probably well help support the multiple, maybe even take it a little higher. And then the second thing is a new investor or taking a fresh look at this, live sports. I want to see, and I think the market will respond positively to them kind of building out more of the bundle, if you will. And the way you do that from Netflix today is building up more live events, live sports at the top of that list. So we want to hear about these. That'd be kind of the second catalyst I'd be looking for in the stock.